I haven't had anybody on the show who does parking.
We like parking because if you buy it at the right location, it makes money. But more important than that is it's irreplaceable real estate. It's got to be in just an absolute phenomenal location, one that stands on its own as an investment. And in 15, 20 years, whenever cars are flying or whenever people aren't driving anymore, whatever that might be, parking garage might not be the highest and best use. Well, guess what? We can easily knock it down and we still have prime real estate underneath it. Great way to hold phenomenal real estate and make money while we're doing it.
Kevin, when you're looking to buy a mobile home park, A, what's your criteria? And B, what type of returns are you expecting year 1, 5, and 10?
That's a great question. I mean, basic criteria revolves around the market. You know, we want markets that are growing in population, that have good, diverse employment bases there, and, people can get jobs. And we also want a place that has not everywhere in the country has an affordable housing crisis. There are places where you can buy single family homes still for under $100,000. The areas of Michigan, probably areas in, rural Iowa. There's a lot of areas where you can still find affordable housing, right? That's under $100,000. And so we want to know it's in an area that's, got a shortage of that. The median home prices are $250,000 and above. And then, I think lastly is the size. For us, the bigger, the better. I'd say our ideal minimum is about 100 sites or larger. We do own some smaller, but ideally 100 sites or larger, just more scale, more economies of scale when we've got a larger footprint in a respective area. And then as far as, returns, again, that's a little bit of a loaded question. We're mostly value add guys. And so a lot of times it's not about, what's the going in cap rate. It's like, what is it at stabilization? And, our business plan, depending on how heavy of a lift it is, it could be anywhere from we truly might be able to get it to stabilization within a year. Normally that's a little short fused. I would say mostly it's probably like a 3-year plan to really get it to either at stabilization or darn near like 90% to what we would consider to be stabilization. But once we hit that point in time, our levered returns we shoot for about 8 or 9% cash on cash return. And then, if you're looking at IRR, which I hate that metric because I think it's misused quite often. But if we underwrite to like a 5-year exit and then look at IRR, we're somewhere like in the 16 to 17% range, somewhere around there. So it's a very misleading metric, and most people don't understand actually how to even arrive at IRR and what that means for them. But I'll give it out anyway because I think it's a common one. Cash on cash, I think, is much more relevant. And so, the cost of our capital, we bring in capital from retail investors. And so really our objective is once we hit stabilization that we can meet or exceed the pref just purely on a cash on cash, levered cash on cash basis, year in, year out, we can exceed that mark. And really the pop comes at a recapitalization event or a sale. With us, it's normally a refinance event. We don't like selling all that often. So we tend to hold on to a lot of things that we buy. 80% of what we buy, we have the objective of holding on to for 10 plus years.
I always say the most you can do in real estate to extract the most amount of money is to do nothing at all. Obviously, when I say nothing at all, doesn't mean you don't maintain the property, but it means just sit and wait and let the property provide. So that's our strategy.
Absolutely.
But tell me about parking. I haven't had anybody on the show who does parking. Tell me about it, what you look for, where you look for it, and what returns you expect there.
Yeah, I'll tell you, that's not the first time I've heard that on the different shows I've been a guest on. But we're kind of we're unique in that, and that's one of the things that attracted me to the space. I met a guy that, as these stories commonly go, I met a guy that happened to own parking. Interviewed him on my show about 7 years ago, and I was so intrigued because I never knew anyone that owned parking, never met anybody that owned parking. However, we've all parked somewhere and paid to park there, right? And someone might be listening to this in a paid parking spot, right? As they listen to this podcast. And so for me, it was intriguing enough during our interview, I asked a lot of questions and I left the interview and I was even more excited to learn more. And so called him back and, really spent another hour on the phone with him, flew him to Tampa a little bit later. Like literally, I couldn't stop thinking about this, what seemingly was a very fragmented asset class. And there's parking all across the country. Half of it's owned by cities and municipalities. The other half is owned by private companies, a couple institutional groups out there, but like generally private companies. And so for me, how we look at the asset class is You will only buy in larger primary markets. We want to be in markets that have growing populations, that have thriving, urban cores. The example to use is we just purchased an asset about a month and a half ago in downtown Charlotte. It's an 800 stall parking garage. It's right across the street from the Spectrum Center where the Charlotte Hornets call home. It's where all the big concerts happen there. It's literally the closest parking garage to that arena. On top of that, it's got a skywalk that's attached to the Bank of America U.S. headquarters, and they don't have enough parking there. And so they literally pay us for like 300 spots a month. It's right around the corner from the Truist headquarters. Charlotte, for those that don't know, Charlotte's the banking hub of the U.S. A lot of folks aren't aware of that. And outside of that, there's a ton of Charlotte's a booming city, and this immediate submarket of Charlotte and downtown is huge. So we look at it as we can go in. Number one, this was owned by an institutional group. It fell in the receivership, not because of the garage, because it was attached right next to an office building that was cross-collateralized and a loan. We figured out that we found a solution to that problem, brought someone else in that could take the office because we didn't want it. They're turning it into apartments, but we wanted the garage. And so we got it at a great price, but also we found even though a lot of folks think that institutional and stuff, they've got to be, they're on it. They've got their finger on the pulse. They're doing a better job than anyone because they have the resources to run and operate things. And, they get lazy too, just like everyone else does. And there was a lot of levers to pull there. So it's a great condition, well maintained. Was doing about $2 million of NOI when we took it over, and we identified 3 big levers that we could pull. One of them was literally the parking rates were about $1.50. They hadn't adjusted the parking rates in 4 years in this garage, and they're about $1.50 an hour under everyone else. So literally just pulling that one lever added about $300,000 of NOI to the bottom line. And literally, no one's not going to park there because we raised it to what all the other garages are charging, right? And we're the most convenient one. So we like parking because it makes money. If you buy it at the right location, it makes money. But more important than that is it's irreplaceable real estate. When we look at it, and we don't underwrite this portion of it, but it's got to be in just an absolute phenomenal location. This one's like a 2-acre footprint, literally in the most desirable part of Charlotte, and it actually makes money. So it's a cash flowing covered land play, one that stands on its own, as an investment. And then 15, 20 years, whenever cars are flying or whenever people aren't driving anymore, whatever that might be. And we're left with a garage that might not, a parking garage might not be the highest best use. Well, guess what? We can easily knock it down, and we still have prime real estate underneath it. So that's kind of how we look at it. And that's icing on the cake down the road. But, for the first, part of the investment thesis, it's got to make sense as parking. We got to feel confident that there's at least a 10-year runway, which this one's got way more than that. Charlotte's very much a driving town. I got a call from our asset manager this morning. He was there at 8:45. He was staying at the hotel right next door. And so you could see he was on the 10th floor, and ours is 8 stories. You could see the upper deck. And so normally, you only ever park in the upper deck when it's full. Literally, you keep driving until you find a space. And at 8:45, he's like, yep, and right there, the last spot just got taken. So literally by 9 in the the parking garage is full. Most of it's from a lot from bank employees. But Charlotte's also 24. Another important criteria for us, it's got to be a 24/7 city. So it's got to be a city that not just has 9 to 5. It's got to have after hours and then also weekend things happening. So restaurants, entertainment, sports venues, offices, retail, multifamily. It's got to have all those factors, and it's got to be fairly diverse. So it's an exciting space. There's way more deals that don't check our box in this space than that do check it. So we've ended up buying one a year for the last 4 years, and they've been great assets. They've been phenomenal locations. The last one was in downtown Charlotte. Great cities, great locations, and again, just a great way to hold phenomenal real estate and make money while we're doing it.
Makes sense to me. So it's less about the difference between a parking lot and a parking structure. You're looking for a structure as opposed to just asphalt lot.
We like both. We own asphalt. We own asphalt lots as well. We like both. In fact, asphalt lots are quite easier. They're very simple. The challenge with asphalt lots in big cities, using Charlotte as an example, the footprint of where our 8-story, 800 lot garage is, you could probably, if it was just asphalt, there'd only be 100 cars there. And so the challenge in big cities like that is now with that surface lot, our competition as far as a buyer comes from developers. And a lot of times, if a developer is going to come in and build a mixed use structure of any sorts, they could probably pay quite a bit more than we can because we're not underwriting it as an immediate development opportunity. We're underwriting it, for the cash flow that it's currently creating. So that's the tough thing about finding surface lots at the right price in really great markets. And we have, but they're definitely few and further between than that of an actual parking garage.
Yeah, that makes sense.
So you kind of have to buy like the surface lots. You have to find the markets that are kind of on the upswing. Maybe not. It's not going to be a Charlotte. Or it could be a submarket of Charlotte. Like it could be literally like a neighborhood that's like going through the regentrification process. It's going there. If you're willing to like kind of hop in today, you might not make a lot of money the first couple of years, but knowing that like you're gonna be very happy in 5 years looking back that you bought that surface lot, right? That's how you make those make sense. But you got to be, a lot more forward looking and take a little bit more of a gamble in order to buy them in just phenomenal locations. So a little bit more challenging, but definitely doable.
It's cool. I know as a podcast host, I'm excited because clearly I'm learning, our listeners are learning, and we appreciate you doing that for us. Kevin, for everybody listening, who are you? And how did you land yourself on Commercial Real Estate Secrets, the podcast?
Yeah, no, I appreciate that. So, I mean, as you had mentioned, I'm the co-founder and CEO of Sunrise Capital Investors. So we're a private boutique real estate equity firm that specializes in two verticals, one being manufactured housing and the other being parking investments. So parking lots, parking garages. Throughout the country, I've been a full-time investor since I was basically 20 years old. Bought my first rental property when I was 20 years old. I'm 45 now. It's all I've really done. Never had a real job of any sorts. And so been at this game for quite a number of years, decades, I guess you could say. And got in, I've owned hundreds of single family homes. I owned many different types of commercial real estate over the years, but ultimately landed kind of by accident on mobile home parks back in 2011, started buying communities, and now we own them in today it's 17 different states, Northeast, Southeast, and some in the Midwest. And then in addition to the mobile home parks, also, again, as I mentioned, own parking as well, parking garages mostly, but also some parking lots and some great locations across the country. So that's the really quick and dirty version of me and the background and who we are and what we do. Okay,
if you could choose one product type, mobile home parks or parking garages, which one?
Yeah, and I mean, they're both great for their own, they've got their own merits. But, residential housing, I think it's very easy for me to understand. It's one of the, basic needs. Everyone needs a roof over their head, and we've got a massive affordable housing crisis in the country, and mobile home parks fill that void incredibly well. And so if I had to choose between the two, I would choose mobile home parks. I'm only making you choose to further the conversation. Yeah, no, that's a great question. Great question. Again, they both kind of stand on their own merits and have both been absolute phenomenal performers and are both very fragmented and have, again, just the reasons why we love them. But again, as far as a human basic need, everyone needs a roof over their head, and we have a shortage of it. And even more so, we have a shortage of housing that's affordable. And so again, for that reason, mobile home parks really are the best option to help put a dent in that crisis.
As someone who analyzes real estate every day, manages real estate, buys real estate, talks to people like you about different product types, I find that there's two things in common with mobile home parks and parking. And it's both are minimally intensive in terms of management. This is not a breakthrough. This is probably exactly why you run these two product types.
Yeah. Minimally management intensive. I don't know if I would define mobile home parks at least as that.
Okay.
Yeah, it's, we're vertically integrated, so we have our own in-house property management. It's probably the largest part of our organization as far as staffing. Seemingly, if everyone paid their rent on time each and every month and everyone took care of their homes and, just didn't have staff turnover, you didn't have challenges like people didn't lose their jobs, right? Like things like that, then I would say that it would be, a very simple and easy to manage. But when you're dealing with hundreds or really, in our case, thousands of different personalities, different individuals, I mean, that by itself, creates, just normal challenges, but then add on top of that, there's financial responsibility. Again, just enforcing neighborhood rules on a regular basis, and just so there's complexities that exist there that I wouldn't classify it as easy, It's not like surely it is nowhere near like a triple net, like, Walgreens or CVS or maybe even any form of triple net property at that, right? And then same thing with like a litany of other commercial types. When you start talking about whether it be retail, industrial, or office, I shouldn't be thrown in that category right now. But you don't really have longer term leases. There's 3, 5, 7, 10-year leases, and we're dealing with a lot of times annual leases that renew on a by year basis. So again, just you got a little bit more movement in and out, what have you, than you might have with a normal commercial asset. Parking, on the other hand, also not as easy. In theory, it's just you drive in. We've all done this. You drive in, you pay either an attendant or you pay the machine to park. You park there and then you leave, right? And there's a little bit more moving parts to it than that, as far as where the parking's coming from, different times of day, adjustment of rates based on supply demand factors and all that. And so with that being said, we do work with professional operators. There's big management companies in the space, some that are publicly traded. And so as far as from an intensity standpoint, we do have a full-time asset manager in-house, but he typically is the one that's running the day-to-day with the management arm of the folks that oversee the day-to-day operations of the parking. So for that reason, it's simpler, but we're also not vertically integrated with the management. If we were, it would be equally as complex. So,
it's funny. Yesterday, I was talking to a fund that buys mobile home parks. Mm-hmm. It just so happens that I have 2 folks this week who specialize in mobile home parks. And the group yesterday, they said, it's so easy. All you do is buy the land. All you do is,
bullshit.
It's just the dirt. Right. Yeah. And I'm thinking to myself,
I could give you that argument. I mean, like that's a storybook, but that's just that's not the case.
I literally am sitting there thinking to myself, that makes no sense. Like, I know, like
you should bring them back on. And we'll have a debate of, I've been doing it for 15 years. We've owned, tens of thousands of lots. So that is, I could, in a perfect world, it's easy. So here's the thing, I'll add some context to what I mean by that. In a perfect world, so back when a lot of these mobile home parks were built, the basic business model was, hey, I develop this land. These folks bring their mobile homes in. They just pay me lot rent. I don't own any of these homes. They maintain their roof. They maintain their HVAC. They pay me on time. Like I said, we're in a perfect world. They all pay on time, and everything's hunky dory. Well, I mean, over time, a lot of these parks were built 40, 50 years ago. So now, we deal with aging infrastructure. A lot of these parks have older, water lines, sewer lines. Just maybe they were, a lot of these things were built by folks that weren't necessarily developers, farmers. They're like, I got a piece of land. I'm going to put some roads in and water lines, sewer lines. We find that maybe they didn't dig the water lines, sewer lines deep enough. And so you got issues there that come up with, frost lines and things freezing. You've got just, again, material that was used 50 years ago that we don't use today that corrodes on the ground. Cast iron, would be one of them. Just things like that's like below the ground. Then above the ground, you've got, over time, what happens is, and this doesn't happen all the time, but like, you get folks that they've lived there 20 years and they pass away, and guess what? Their heirs don't want that home. And then so you'll find, instead of the mobile home owner or the park owner not owning any of the homes, now instead of 0, now he's got maybe 10 or 15. And ideally, we like to sell them back. We don't like to own the homes themselves. But in our portfolio of roughly 3,500 lots, we own about 350 mobile homes. And some of the communities we own 0. They're literally 100% resident owned, which is still that's the easiest way. But again, there's still day-to-day stuff we deal with. But then we got other communities where give the other end of the spectrum where, one that comes to mind is we've got a 200 space community and we literally own 100 of the homes that are in there. Right. And so we got normal turnover. These are rental units, which operate, they live and breathe very differently than someone that owns their home, right? These people are coming and going every 12 or 18 months, right? So we got to turn units and we've got maintenance crews on staff and all the other challenges that come with just managing a lot of rental units. So again, in a perfect world, it is hunky-dory. All the units are new. They pay the rent on time, and we don't own 0. We own 0. But I can promise you, if you talk to any mobile home park guy that's truly been in the space for quite some time and has done a lot of transactions, he's never going to say it's an incredibly easy business. It's just, that's kind of BS. So again, not to call out whoever was on the show, but like, it's BS.
A very, very funny juxtaposition. I have managed residential. I don't manage residential anymore for this very reason. But, you think about intensity of tenants, it's like you said, easiest tenant is going to be your net. Okay, not a Walgreens this week but like a,
right.
a net a credit tenant in the trades in a warehouse. And I'm thinking to myself, how in the world, if you have all these folks in a mobile home park, are you not having exactly what you're saying, rent collection situations, folks moving in? No, it was just a funny thing. And I love hearing the juxtaposition in. And
I'm not going to say it's all bad. I mean, we have very tight credit requirements of folks moving in, right? So we ensure that we do employment checks and income verifications and credit checks and verify trade lines and all this kind of stuff, right? So like we've got pretty strict criteria, and so I mean we're not the ones that just got out of jail, you need a place to stay, you come to one of our communities. That's not how we operate, and that's not what our communities are like. Most of ours are just good, hardworking folks that want to be in good school districts. They want to send their kids to the better schools, but ultimately can't afford to, spend $300,000 or $400,000 on a stick-built home, right? They might, it's a dual working household, but husband's a manager at Walmart, makes, $22 an hour. Wife is a secretary or admin, makes $18 an hour, right? And they're just trying to get by. They're doing their best. They pay their bills on time, and they, again, want to have a clean, safe, healthy, and affordable place for their children and to create family memories. Like that's literally who our resident base is for the most part. Outside of that, I'd say we've got a few communities that are mostly made up of seniors. Again, empty nesters. They downgraded maybe even from a single family home. They want less maintenance upkeep. Typically we maintain the lawn care and all that kind of stuff. So like they want it easy, and they wanted something cheaper, more affordable, and they don't need much space. So that's our other demographic that we serve. So it's, and they're all great for their own purpose. But, again, still challenges that are associated with either one.
Look,
people are challenging, right?
Yeah.
Just inherently, the human race is challenging, and so when you start dealing with thousands of us on a day to day, and when finances are involved, there's complexities that come up.
And that is life, and that's okay. That's reality. Yeah. Kevin, what makes you happy with what you do every day in commercial real estate?
Yeah, I mean, I've always been a deal junkie, so I love hunting deals, and I love creative structuring, just finding complex problems and finding solutions for those problems. So I think that's how we make really good money as real estate investors, is, again, being able to find a complex challenge, one that maybe others run from, and figure out a solution for it. So I enjoy that.
Well, from one deal junkie to the next, on to the next deal. Kevin, aside from listening to the Real Estate Investing for Cash Flow podcast, where should our listeners find you, follow you, learn more about you, etc.?
Yeah, so I mean, you can. My last name's unique enough, Bupp, B-U-P-P. I'm pretty active on LinkedIn. I'm active on Instagram and Facebook. So you just type my name in, you'll track me down pretty easily. Outside of that, if you want to learn more about what we do in our company, Sunrise Capital, you can go to investwithsunrise.com. We've got a current offering there, but also we've got a lot of different resources. We have case studies up there that we kind of show on deals that we've gone full cycle on. Give the full story of what we paid for it, what we did to it, how many years we held it, what the business plan looked like, and then what the exit looked like. So just some educational things like that as well. A couple white papers on there as well that you can download about parking or mobile home parks. And outside of that, again, I'm pretty easy to track down on any of the social pages. So
awesome. Well, Kevin, thank you for being on the show today. And for everybody listening, we'll see you next week.